building beats. We teach kids how to make music, how to DJ, how to produce beats. Um, Throughout that time, I always knew teaching young people technology was an important thing. So I always had an interest in the crypto space because I always had an inkling crypto would kind of influence the world in some sort of way. Fast forward to today, I think the elections last week were a little kind of crazy for a lot of us, but it also gave a lot of acceptance to crypto into the mainstream in a lot of ways. Policy is changing to be more pro crypto. I think 10 years ago, I couldn't imagine a president even knowing what Bitcoin was, but here we are. Um, and I'm continuing to build within the crypto world. I think it's the future, and I have so many things, so many mental models, so many thoughts I've gotten from it from my past 10 years. This workshop hopefully is a way for you to learn a little bit about it for yourself, whether you want to become a crypto trader, you want to build and work within the crypto industry. I think crypto is going to touch so many different parts of our lives in whatever ways. Maybe not as influential as the internet, but somewhere up there. And as we know, the internet has really influenced us in so many ways. So understanding just a little bit about crypto, I think, is important. And I think it's a journey everyone should go down to really just understand the potential future we're moving towards. Before we start, can you put in the Zoom chat on a scale of 1 to 10? How advanced would you say you are about knowing about crypto, blockchains, cryptocurrencies, Web3, all that? 10 being you live and breathe in this space and you know the ins and outs. You know how to stake, restake, you know how to build new networks. You're a degenerate. 1, if you don't even have a coin. I'd like to get a survey just to kind of see where folks are at in this room so that I can kind of help mold our workshop towards that. Cool. 2, 4, 6, 1, 3, 3, 3, 5. Okay. All right. So it sounds like there's a lot of people who are still new to the space. Let's get started. Before we get started, NFA, DYOR, NFA, not financial advice. Everything I say here, you shouldn't take as financial advice. I'm not a financial advisor, so I just want to have that disclaimer. There's a lot of stuff in here. There might be coins and stuff listed. It doesn't mean that you should buy it. DYOR, do your own research. This is just one workshop that hopefully gets you on your journey to learning about crypto. All right. So what is a mental model? A mental model is a simplified explanation of how something works. I like to think about mental models for kind of any sort of project or new thing I take on. And I think there's a lot of mental models that has helped me navigate the crypto space. Let me continue on. Mental models, any idea, belief, or concept that can be boiled down to its essence. They're tools for compressing complexity into manageable chunks. This is a quote, I think, from Charlie Munger. It says, if the only tool you have is a hammer, you tend to see every problem as a nail. I like to accumulate a bunch of different mental models and think about different things because I like to have a lot of different tools in my toolbox. I know the world is not just nails, so I use a lot of these things to think through how to kind of approach different problems, and in this case, in the crypto space. I forgot if I didn't reiterate, but if there's any questions that come up, feel free to put in the Zoom chat. Let's go on to the next page. First mental model. Know your risk profile. So as you're getting into the crypto space, you hear people who make money overnight, but you also hear other people who spent years and years building up their wealth, building up their income, whatever. You have to learn, what is your risk profile? Are you that type of person who wants to stay hands off, who wants to think about investing in crypto in the long term? Your timeline is usually in years or decades. We have an example, a Bitcoin DCA example, the next slide will show. Or are you the type of person who's a short-term trader? Are you what they would call terminally online and able to catch the quick trades? Crypto moves so fast. It's this kind of new market that was born on the internet. And as we know, the internet moves really fast. And we're in this future where coin can launch right now. And, 10 minutes later, it can go up like 100x. So there's definitely like two different approaches you can take to crypto. You can go the long-term way and not even worry about the day-to-day movement of things, or you can go the short-term way. Or You can be both. Myself, I would say I'm both. I would say I have wallets that are for long-term investing, but I also have kind of styles and philosophies that allow me to be a short-term trader as well. I can kind of do a screen share on some of that later too, if folks are interested. But how I think about it is you can either be a short-term or a long-term investor. There's sometimes you could be like that mid-term person. I like to keep it even more separate, where I have like accounts and wallets just for my long-term investments and accounts and wallets for my short-term investments or short-term trades. But let's go to this first example. It's a Bitcoin DCA example. Has anyone heard of DCA?
Nope, I didn't. I
Cool.
don't.
Bunch of no's, bunch of no's. DCA stands for dollar cost averaging. It's actually a universal investing strategy where you set just a certain amount that you're going to put into whatever investment. Maybe it's one day a week. Maybe it's every Monday. You're going to put $5 into the stock market. A lot of people, they do it based off of their payroll. So maybe every 2 weeks, you're going to put $100 into, so-and-so investments. I saw this on Twitter just last week. There was this young guy, I think he was 22 years old when he started this. He had a DCA strategy for buying Bitcoin. His rules, he would buy $30 a day of Bitcoin every day. He's done it for 8 years now. I think last week he hit his 8-year anniversary. When you calculate $30 a day of Bitcoin, that ends up being $10,950 a year that he would be buying Bitcoin. Whether it went up, whether it went down, the beauty of a DCA strategy is it takes the emotions out of it, right? You don't even care if it goes up or it goes down. You're just going to set that time every single day or every single week or every single month or every single year is like, you're going to buy this. And this was his strategy. His portfolio is now, I think last week it was 861K. I think it's probably somewhere around 950K now. If you think about it, that is 10,000, that's about $11,000 a year for 8 years. So he's invested about $88,000 into Bitcoin for the last 8 years. And that portfolio is now worth almost $1 million. I think he's a really good example of being a long-term investor. He did not trade his Bitcoin in any sort of way. He bought every single day, whether it went up, went down, through the highs, through the lows, and he just set that routine. And, lo and behold, 8 years later, he's almost at $1 million, and it's only sacrificing $30 a day. So I thought it was a really cool and impressive story. If folks like, I can also link to the actual Twitter thread. Let me just click through it here. I'll put it in the Zoom chat for now. Feel free to take a look at it later. I think, if possible, we may send out all the resources from this conversation and workshop too for folks. Any questions about just long-term investing? I think the beauty of being a long-term investor is you don't have to deal with the crazy ups and downs of crypto. If you think crypto is going to be around for the long term, it probably makes sense to be a long-term investor. You don't even have to study the space or know much, except for which kind of coins are you buying. This guy, he just chose that one coin, Bitcoin. I think we all know what Bitcoin is now, even though we're in a world of probably 1 million new coins now. He wasn't chasing every new coin. He just stuck to his one thing he was familiar with, which was Bitcoin in this case. Let's go to the next slide. So knowing your risk profile, there are different, I think there's a questionnaire. You Google it, like, how do I find out my risk profile? You can figure out how risky you are. Are you a person that likes to take high risk for that potential high reward? When you think about in the crypto space, there are now different sort of kind of categories and subjects within the crypto space. Some of them are lower risk, lower reward. Some of them are high risk, high reward. This chart is pretty simple. It's a little dated, but these days, the lowest risk, lowest reward potential is actually Bitcoin, because it's kind of, quote unquote, the safest coin. Just, it's been around the longest. It has the most mainstream appeal. So it actually is, if you're going to invest in the crypto space, one, yes, that's risky. But if you want to do it in the safest way, buying Bitcoin is probably the simplest. The second coin that really got big mainstream success was Ethereum. And Ethereum would probably be a little bit further down this kind of risk reward line. What we have here is large caps, mid caps, and low caps. Caps stand for kind of market capitalization. So a large cap is you have a high market cap. A mid cap is you have a middle market cap. Low cap is you have a low market cap. We'll talk more and more about that, but this chart shows if you want to be riskier, you're going to probably look for some of those newer, coins. Some of them people call them altcoins. Some of them are called shit coins. There's different ways you can say it. Those are usually going to be more rewarding in terms of the potential payoff, but they're also riskier in that they could also go to zero. I think we're at this stage in our society where it's very unlikely that Bitcoin will go to zero. So that's why it's probably the kind of lowest risk, lowest reward on this chart. Let's go to another chart. This is a little bit similar. I think it's a little bit more updated. So you see BTC, which is Bitcoin down here, ETH, and I think the newest coin that joins ETH in that next level is Solana. So Ethereum, Solana is one of the ones that are just a little bit more than Bitcoin. And then what I said earlier, altcoins. We're in this new world of meme coins. I think folks may know what Dogecoin is. That's like kind of the ultimate meme coin there. And there's this new site called Pump.fun right here, up here on this chart. It's called, someone put it, Pump.fun Jeet Casino. It's Pump.fun is a website that allows anyone to create a coin. And it's a little insane how fast, we can even go to the website later to see how fast coins are launching. I think they launch something like 10,000 coins a day. So it's like anyone can go in there, put in a coin name or whatever, and you can launch it. And those are obviously the highest risk, high rewards, because a lot of those, I think 99% of those end up going to zero. So in terms of the risk curve, this is another way to see it. All right. Zooming out, looking at this risk curve a little bit beyond just crypto, I wanted to show you where crypto is compared to just all investments in, or that you're able to invest in. If you look here, so actually the risk and return axes are switched on this, so just keep that in mind. But the safest thing you can have is cash equivalents, right? Low risk, usually like no return. And these days in our inflationary macro economy, actually your money actually is going down in terms of your return. The next one off the curb, short-term bonds. Bonds are usual. Corporate bonds are another one. In the middle here, there's gold and real estate. I think those are generally in society, when people want to think about kind of safe investments, gold and real estate is usually kind of known as like, oh, the safer bet, right? You're taking decent risk, but you're getting decent return. Hold on. Paulie, can you mute yourself? Continuing on this risk curve, index funds right in the middle, right? That's stocks, or that's kind of like mutual funds. That's like a basket of various stocks. Equity funds are, I would say, stocks. Derivatives, alternate investments. Private equity, venture capital is the furthest here. That is kind of people who are investing in tech startups, all that. And if you look on this chart, crypto is the very top. So when you zoom out, I started with just this here of Bitcoin, Ethereum, large caps, mid caps, low caps, all that. But when you zoom out, crypto is still probably the highest risk, highest reward space. So I guess I'll say here is like, you probably shouldn't put 100% of your net worth into crypto unless you know what you're doing. And when you think about it in terms of all these other investments, it is still extremely risky. So going back to this mental model of knowing your risk profile, learn about the type of person you are. Maybe you are feeling more comfortable thinking crypto has a future. Maybe you want to allocate 5-10% of your net worth. Maybe you think you're going to get to the point that 50% more or more is going to be what your net worth will be, is going to be crypto investments. Know that out of all the investments you kind of make in the world, it's still up there in terms of some of the riskiest ones. Let's go next. A way I think about investing and a way I think about my own risk profile, I have this model called the barbell strategy. I learned this from this author, Nicholas Nassim Taleb. His book, The Black Swan, I think is listed at the bottom. That is where I learned about the barbell strategy. It's how do you separate your accounts into two different things? This one, it's a representation of a barbell. 85% are sure bets, low chance of loss, and 15% are the wild cards, so high potential upside. So if you go back here, it's like something like putting 80, 90% of your investments into bonds while you put 5 to 10% into crypto or investing in companies and tech startups. That way, you have the majority of your wealth into a super safe bet that probably is a very low chance of going to zero. And you allow that 10, 15% to potentially, in crypto, they would call it taking you to the moon, right? It can get that 5x return, 10x return, etc. When I said I have accounts that are kind of long-term and short-term, this is really how I think of it. I think about the barbell strategy, one, within my crypto portfolio, but also within just my overall portfolio. These days, I'm trying to diversify on having something super conservative. My conservative thing is probably real estate these days. I actually don't buy bonds. I guess I'm kind of riskier than the average person. I find real estate to be probably my safe bet while I spend most of my time on my wild cards in the crypto world. So my barbell would be 85% in real estate, 15% in kind of crypto and just other kind of quirky, high risk ideas. All right, that was the first mental model, know your risk profile. Any questions from there? I'll just pay attention to the Zoom if it pops up. The next mental model that I think about all the time is this idea called inversion. Let me just read this. This is a quote again from Charlie Munger. And if folks don't know who Charlie Munger is, he passed away. He was Warren Buffett's #1 partner. So they built their fund together, Berkshire Hathaway. I think Charlie Munger has always been the brains of Berkshire Hathaway. Warren Buffett is the most famous one, but I've learned so much from Charlie Munger in terms of investing and just understanding finance and how do you think through investing. So his quote on inversion here: always flip the situation on its head and first determine the outcomes you wish to avoid. Eliminating stupid mistakes is easier than trying to execute brilliance. What he's pretty much saying is the goal is not trying to make $1 million. The goal is to not lose all your money. I think there was another quote he said, is like, every day, I'm not trying to take over the world. Every day, I'm just trying to make sure I don't die. So this kind of concept has helped me really think about my goal is, especially within like the crypto world, is I just need to survive. I can't let my assets, my investment go down to zero. That's my goal. I'm not trying to go for $1 million. I'm trying to make sure I don't go to zero. I don't know where you're at, everyone here, in terms of your crypto journey. If you want to allocate $10, that's cool. If you want to allocate $1,000, cool. If you want to allocate $10,000, whatever. You may think about trying to get that goal of you want to get a 2x on your return. You want to hit $1 million. You want to hit $100,000, whatever. I would say sometimes it's helpful to think about just not losing your money to keep yourself in the game, because I think that's going to be the most important thing in the long term for you to be successful. This is obviously inversion works not just within crypto, but like everywhere else too. And I guess that's one thing I forgot to mention is mental models are really helpful for kind of any discipline or space you're in. So what I said, when I think about risk or inversion, risk management is the key to success. So if you really want to be successful in crypto, you just have to make sure you don't go to zero. Going to zero is kind of psychologically paralyzing. It's financially paralyzing, right? If you run out of money, there's like really nothing else you can do. If you want to continue staying in this space, whether you're a long-term or short-term investor, your goal is to make sure that you manage your risk well enough that you can stick around, because it will allow you to continue learning and you'll be invested in learning because you still have money in the game. Going back to risk management, this is why I like this barbell strategy. It allows me to stay in the game, even though some of my wild cards end up going to zero. I've bought so many coins now. I would comfortably say I probably bought over 100 coins that have gone to zero. But because of my risk management, I'm able to continue staying in the game, and I'm able to just make sure that like I'm not just putting all my money into one basket and hoping that's going to be the answer for me to be successful in the crypto space. Oh, some more tips about risk management. So if you're getting nervous on a trade, you're probably trading too much. keep that in mind. That's, these days, my trades, I have a good amount these days that $200-300 on a trade. If it goes to zero for me, I'm not really that scared anymore. For some people, it could be $1, could be $2, could be $5. That's fine. I think we're at that stage where small money like that can actually help you continue learning, and we'll go through some of that. Another good practice: aim for a trade to risk only 5 to 10% of your total assets. So if you have, let's say you have $100, your trades should probably be risking around $5 to $10. So in the crypto world, that means like your maximum bets on a trade should be something like $10 if your account is $100. That way, if you lose, you don't lose all your money, and it still gives you enough to like continue thinking about, the next trade or the next investment. And it's small enough, 5 to 10%, that gives you around 10 to 20 different investment opportunities. And that 10 to 20, I think, is important because as I've gone through the crypto world, I've seen it is very possible you can get a 2x on your investment, a 5x, a 10x. I've been fortunate that I've caught some that is 100x. I think my maximum I've got was like 300x at one point. So as long as you're able to stay in the game, let me see, $10. If you did a $10 investment and somehow you got a 100x, that is $1,000. If you started out with $100, but you have spent $10 and you got 100x, you just 10x your entire portfolio from $100 to $1,000. The other good practice scaling out your profits. Crypto has this tendency to go up really fast, really quickly. It's always healthy that you sell some of that, so that you can continue just staying in the game. Let's go back to an example. Let's say you put $20 in something and it goes up. Your general practice, if it goes up like 10-20%, you should probably sell half of that. All right. But in crypto, sometimes you want to be a little riskier. You can wait till it goes up like 2x, 3x. If it's $20 and it turns to $40, you should probably take out your initial investment. Take out that $20 and you still have $20 still in the game in some sort of way. So these are just a few ideas to think about for risk management. They're obviously not the only ways, but I think 3 of these are things I think about a lot when it comes to risk management. All right, next mental model. To succeed in crypto, you have to succeed in your mental health. This is a really tough space. I put this screenshot, I saw it last week, November 8th, 2024. It's kind of a joke, but it's kind of real. I will be taking a break from my mental health to focus on crypto. Crypto, because of the way it's designed, it is something that can really suck you in. Some of the reasons here. It's high risk, high reward. Things can go up 2x, 5x, 10x, 100x, and be life-changing money, but it can go down just as much. A lot of people, when they first get into crypto, there's something called round tripping. Round tripping is when your investment goes up like 10x and you're like, holy shit, my $100 just turned to $1,000, and that's just mind-blowing. But round tripping means it goes back down and you didn't sell anything. It becomes an emotional kind of burden. And it's like, you have to think about your mental health when you're getting in this space. And it gets really tricky if you're not paying attention to your mental health. The other thing about crypto that makes it so unique is that it's a 24/7 market. That means it's open all hours, every single day. The markets are trading every single kind of minute of the day. It's trading right now. It's going to trade tonight. It's going to trade tomorrow morning. It's always on. That is different than our traditional markets. The stock market used to be, I think it's 9:30 to 4 o'clock, Monday through Fridays. That was when you could buy like stocks. And now stocks have slowly kind of been moving a bit more to like a more open market, because crypto has kind of led us there. And there's this term I like to call cryptosomnia. Is you may wake up in the middle of the night if you have investments, especially during the highest kind of volatility times of crypto, you're going to be waking up checking the coin prices. When you lose sleep, it kind of messes up your mental health. So when you think about wanting to get in this space, you have to figure out how you can kind of prioritize making sure your mental health is in a good place. And depending on your kind of investing or trading profile, are you going to be that short-term person, or are you going to be that long-term person? And then the last thing is, I know a lot of us that there's still that hard attachment to our phone for whatever else, social media, news, doom scrolling, all that. crypto is another thing on top of that. With the prices trading 24/7, there's always activity and it always gets you sucked into your phone. So really, I think this slide here is, it's always been a challenge for me to figure out how do I make sure I have kind of optimal mental health while I'm in the crypto space, especially because I chose to kind of play around in the short-term space. Long-term, like that example of that guy I showed earlier who just does like that $30 DCA, he probably does not have to worry about crypto on a day-to-day basis. But this is up to you. If you choose and you think your kind of risk profile and you're the type of person that's willing to be online regularly, know that it can affect your mental health. Cool. All right, next mental model. History doesn't repeat, but it does rhyme. Study the past. When I first got into crypto, I think I was just like really interested because it was just like this intersection of what I see now is finance, technology, and internet culture. I put in parentheses memes because as we've seen how the internet has built its own culture the last 20, 30 years, that's what we're seeing within crypto. But we're also seeing like the technology aspects, the blockchain, the whole idea of what Bitcoin was, that was like all the cool technology stuff that came out of crypto that makes it interesting. And of course, finance. People always know it for that coin price, but I think it's the intersection of these three. And what's helped me to be successful within crypto is learn the history of all three of these. Learn about internet culture, figure out how groups convened in like the 1990s 2000s in forums, learn about the growth of MySpace and Facebook and then the social media networks of like 10 years ago. Learn about how Instagram has evolved from a business that was for taking nice photos and now it's just a big platform to share a bunch of memes. I think internet culture, thinking about the history of internet culture is one way to approach it. The history of finance, I've now kind of thought about money from when, humans first started transacting and understanding what was the point of money, why did money exist, how did finance evolve beyond money to credit, to debit, to derivatives, to all this stuff, to the stock market, and how has it evolved to where we're at now? And then, of course, technology, right? Technology is, we have built the internet and we saw the internet bubble of 2000, 2001. And now we saw just like the last 10, 20 years, this web 2.0, these social networks taking over a lot of the internet. The history of technology, where is crypto going to take us next? When I think about the lens of history through these three things, it's really helped me get a better understanding of crypto. Although the crypto space and crypto culture, it continually evolves and morphs in such zany and crazy ways. Sometimes I'm always mesmerized in terms of like all the stuff that just happens on a day-to-day basis. Even this past week, where I think Bitcoin was somewhere around like 70,000 before the election, up to yesterday when it hit a high of 93,000. I am astounded how fast it's gone up to almost 100K compared to 10 years ago when it was trading around like $200, $400 per Bitcoin. Cool. History also, you can see it in the charts as well. This is an example of how Bitcoin has moved with the timing of the US presidential election for the last 4 elections since 2012. So if you don't know the history of Bitcoin, it actually was an idea that came out in 2009 because of our financial crash, the Great Recession, as they would call it. September 2009, I think, is when the original white paper for Bitcoin came out. Part of the rules is that Bitcoin would go through this thing called a halvening every 4 years. That was important for its kind of algorithm. But I think another thing that aligned with that every 4 years is the US presidential election. And when you look at the chart of how Bitcoin has moved, this is a logarithmic chart, by the way, how Bitcoin has moved after every presidential election. For one way or another, it may not be repeating exactly, but it rhymes and there's patterns within it. If you see here, these red boxes, these are all kind of like the consolidation or build-up stage. And for some reason, always after the election, that's when the kind of bull market starts kicking off. And that's been the same for 2012, 2016, 2020. And now it's looking like that pattern is repeating again for 2024. For whatever reason, right? This is not always going to be exact. Like I said, this is not always repeating, but it does rhyme. in that you'll see some patterns. And this is, I think, a really good example of that. Another chart of Bitcoin. This is from the 2015 bear market to today. So for folks who don't know what a bull market and a bear market is, so when they're saying it's a bull market is when things are trending up and things are looking to the upside. When things are in a bear market, that means things are trending down and they're looking more to the downside. So people have put patterns on various bear markets because, as we've seen through Bitcoin's history, there are kind of similarities. The first stage is usually capitulation. It hits its highest high, it hits a top, it goes down so hard, so fast, it goes to this next stage of anger. This is, a lot of people who get annoyed with crypto is they usually buy during that capitulation stage, and then they sit through that whole anger era. That anger era can last something like 4 or 5 months, sometimes as long as like 10, 12 months. It really, no one has the best answer, but that's when people are angry. It's like, man, I put all my money in the crypto and I just lost it all. What's the point? And then from the anger stage, it moves on to this next one, disbelief. It's like, oh, is it returning? Is it going up? It's hard for me to really believe in it. And then that last stage, as we see in this chart here, is that hope stage. It's like, okay, it started running again. And then this is like, maybe that chance for crypto to run again. Going back to this chart is, if you look at it, there are always bear markets, there are always bull markets. This is beyond just crypto. That's just like all markets since the beginning of the stock market. Is there have always been bear markets, bull markets. There's always been recessions. There's always been bull markets. And it's just part of the cycle of how, studying the history of finance can help you get a good, interesting, or a good idea of where things can go next. This is another pattern that I like thinking about a lot. So alt season is this new term now that we're in this world of all these crazy coins. The nickname for these coins is called altcoins. So we have Bitcoin, we have Ethereum, and then we have in this chart we have something called large caps, and we have alt season. So altcoins is when or alt season is when altcoins are running the most. The pattern that we've seen for, I guess, now 8 years, whenever Bitcoin has ran, is that there is usually this weird money flow that tends to happen. Money in crypto usually flows into Bitcoin first. Like I said, Bitcoin has that unique thing, being the first one, being that little special snowflake that pretty much, the mainstream and everyone knows about. People rarely know about some of the other coins. So Bitcoin tends to have that first initial price surge going down. Then afterwards, money flows into Ethereum, struggles to keep up with Bitcoin. Ethereum goes back and forth. And then we have what, some people call Ethereum season. Ethereum's outperforming Bitcoin. And we heard talks of the flippening. The flippening is, can Ethereum's market cap get bigger than Bitcoin's? I think these days, this chart is a little outdated too, because I would throw Solana onto there. Ethereum and Solana have kind of solidified themselves as the number 2 and number 3 coins. So phase 1 is Bitcoin season. Phase 2 could be Ethereum Solana season. Phase 3 is the next large caps. So probably coin size number 4 through maybe 15. Those large caps start going a bit more. Here it says parabolic, right? So the money flows from the Bitcoin returns. The thesis and the idea is that because people are getting such nice returns from Bitcoin, they go on to the next down the risk curve, Ethereum, Solana, then you go to large caps. Then the last season of this cycle is alt season. This is when you kind of hear some of your, whether it's friends or you hear in the media, it's like, man, I bought this thing and it 100x overnight, right? Alt season is when, that's like the craziest time within crypto, is you literally can put in 10 bucks and it may potentially become like $400 or $500 within a week. And those returns are just like, totally crazy. And that's why, alt season is in kind of crypto culture. People find alt season to be the most fun because it is the most insane period. I don't want to go back, but that's where cryptosomnia kicks in. That's when 24/7 markets are like, oh man, you're always looking at the prices. But alt season always ends up being potentially the top for that market. And that usually marks the end of that bull season. And that goes, going back to this chart, this is when capitulation starts happening. That's when coins start going down. Looking at this pattern, knowing this has helped me understand thinking about crypto and where we're at. if you were to ask me today where we're at, I think we're in this we're in this new bull market. I think we're still seeing phase one, where Bitcoin money is flowing into Bitcoin right now. This is from just this past week, as we've seen Bitcoin, like I said, it's gone up like 10-20%. We're not totally there yet with this phase two of Ethereum, Solana season, and we're not totally there in large caps, and we're definitely not in alt season yet. The liquidity, the money usually flows all into Bitcoin, and that's what we're seeing. All these other smaller coins are being sucked. The money from there is getting sucked into Bitcoin. There are some new unique things, and this is where it's like, we're so early in this whole crypto journey that new things happen. I've been seeing a lot of meme coins in the last week also pop and go insane. And, meme coins, some people would argue it's a little bit different than altcoins. So, that's all kind of subjective, and it's always just up for discussion. Lay asks, historically, how long does a phase last? I don't have it up top here, but if you see here, for Bitcoin's kind of rise up, the date here, it says, let's go to 2012. Bitcoin went from its low to its high. It took 385 days for Bitcoin to do that. The next one took 392 days. So it's almost a year. The next one was 364 days. I forget why this chart said 371 days is that kind of estimate for this next run. But that is when Bitcoin goes from its low to its highs. And that's just like from previous data. Will it repeat again? It can't be guaranteed, but I think that's a general idea. For this whole phase, I've heard something like 12 to 18 months is usually the basis. Again, keep all this in mind, and this is why I always say history doesn't repeat, it just rhymes, is you can be looking at 12 to 18 months as like a good guide, but again, no one really can totally predict the future. All these crazy things happen, and it's like just, that's the world in ways. Cool. Any other questions about just history and history from thinking about bigger things like finance, technology, internet culture? There's so many other things you can think about. You can study psychology. You can study just the history of art. I think like crypto and art has so many kind of related patterns. Thinking about just crypto in the past, in the last, now Bitcoin's about 16 years old. So you have some past data for Bitcoin. We're seeing all these new coins, and we're seeing this kind of pattern of alt season. History is always helpful. It's helped guide me to kind of, again, like this workshop, right? How do you navigate the crypto world? Thinking about it through the lens of history is always helpful. Let's see. Phil asks, does meme culture really have that much of an impact? If yes, how so? What's the connection? That is a really good question. So I'm happy to even have a discussion with you, Phil, if you want to speak up. But memes, for me, if you actually look up where the word meme came from, it came from a book I think that came out in like late 1970. It was called The Selfish Gene by the scientist named Richard Dawkins. His definition of memes were that memes are actually ideas that try to go from person to person. And when it goes from each person, it morphs and remixes into a different idea. So I know what we're thinking about these days means like, let me go on the internet and let me find this meme that's funny and I can relate to it. That's how we've defined memes now. But when you think about what that initial concept of memes were, is memes were ideas that went from person to person and got remixed. When you think about the lens of memes and that original idea of what a meme was, you can actually see memes just kind of perpetuate and just be a part of human society in so many different ways. An example is when you think about, let's say, Uber. Uber was this really interesting example. It's like if you have an extra car, you can go give people rides, right? And we saw Uber and that idea, that business model of Uber become sort of a meme and a repetitive pattern that led to so many other companies that became what they would call an Uber for X, right? Uber was like, I have extra car space. Let me take people around for car rides. Airbnb, I have extra home space. Let me rent it out for people. The whole Uber for X phenomenon led to a pop of all these different startups and ideas. So I always think about that when I think about memes, not so much the jokes, but so much like how humans and society, how we always think about these patterns. We remix it just a little bit, and then we kind of launch it as this brand new thing. So going back to your question, are memes that important in terms of crypto? I would say yes. I would say Bitcoin was the original like crypto idea, but people have remixed what Bitcoin was into Ethereum. You know, a remix of an Ethereum is a Solana. And then when you see like one meme coin, you saw Dogecoin. And then you see the pop of like Shiba Inu, you see all these other dog coins that, you know, my favorite dog coin these days is called Dog with Hat. It's just literally a dog with a hat. And it just like meme culture has like now pervaded and spread into just the crypto space, because when one coin that is successful takes off, people are going to build like a similar but just slightly different version. And that is an idea for me. Is I think about it in terms of memes. So I'll show you a little bit later, but I saw two examples this past week where what crypto is doing is now financializing what we have thought about of memes in the last 10 years. The two examples I saw, the first one is Peanut. I don't know, folks remember who Peanut was? Peanut was a squirrel that got like murdered by like the NYPD or something. And he became a meme. It was just like, why did you kill that squirrel or whatever? And someone launched a coin called Peanut, and that Peanut coin ended up being like a 20, 30x return. And now it's like people have saw like when you turn these memes into coins, it becomes its whole thing. And that becomes like this whole thing where it's like every meme now, someone's going to launch a coin. And, you know, there's just these degenerates in the crypto world. They're going to buy it up and try to make some sort of money from it. So this whole concept of meme coins is taking meme culture, jokes of the internet, and financializing it through the kind of crypto rails. Did that answer your question, Phil?
Yes,
Cool.
thank you.
Cool. Happy to talk about it more, because I think you should really study memes and memes in like so many different ways and how it's like pervaded and just been a part of crypto. I was talking to my friend this week actually. If you think about Instagram, when it was originally created, it was a network, a social network for people to put up really nice photos, and they had filters to make you look like you're a professional photographer, right? I don't know if the original creators of Instagram have now seen where Instagram is now, where it's just like it's literally like a platform to send memes, just like people just posting memes left and right on Instagram. The original idea, a place for nice photos, now just being like a space to share memes back and forth. I think that's kind of what we're seeing in the crypto space is, hey, crypto used to be whatever. It used to be decentralized money, a place for you to, you know, be non-censorship resistant money, but now it's just pervaded into all these memes and these meme coins. And I don't know if there's like anything that can be stopping it. Just like on Instagram, it's not like people are stopping memes. It's, you know, it's just becomes part of internet culture in some sort of way. Let's go back to some mental models. So this next one, narratives are full of biases and shilling. So within crypto, you're going to hear so many people pitch all these different ideas, all these different stories. This coin, you should be getting this. This coin, you know, this is the future. This is the next meme coin. This is the next project. This is going to overtake Solana. It's going to overtake Ethereum. These are all different narratives. Narratives are really powerful. And I think it's just something that you should be aware of is usually when people have these narratives, their tendency that is they're trying to pump their bags, right? They're trying to shill whatever investments they have. The term I always call it is bag bias. And right here, this first one, bag bias is real bad. Is that it's just part of crypto culture. It's just part of like when you hear people like, you should buy Dogecoin, it's probably they're holding Dogecoin. They want you to buy it and get in so that it's like, you know, you can help pump that price. And that's, you know, with the internet, you got to be mindful of the YouTubers, the podcasters, the crypto kind of Twitter influencers. All these people, they're putting out all these ideas on why this coin's going to be the next big thing. Usually it's because they're pumping their bag is what I like to call it. Is they're trying to hype up their coin. They're trying to get more people to buy or invest in some sort of way. In green here, it's healthy to get a diversity of narratives. You can obviously look at media, whether it's just mainstream media, crypto media. You can look at Twitter. You can look at Telegram group chats. There's various small, friend chats, group chats that I have. I try to get a diversity of different voices to try to come up with like the most kind of what I think is like the right way and where crypto will go. But I know at the same time, everyone's always trying to pump their bags, myself included. I tried to build this workshop today to make sure I'm not pumping my own bags or whatever. But there might be some places here where you'll see that I have a bias in terms of like, this is the sort of coins that I think people should be getting into, or this is the sort of space within crypto I think people should be getting into. I think it's now like just a innate part of crypto culture now that everyone has their own investments. This last one, if there's a hot Twitter thread, there could be a high chance that that person is selling their coins to you. So if you see something on YouTube, you see something on a podcast, or you hear on a podcast, or you see on crypto Twitter is, hey, this is why this is the future of blockchain technology, whatever. They're doing that so that they can pump their bags, and usually they're going to try to sell into that. So keep that in mind. Just don't believe everything you see. You definitely should listen. And the simplest way for me to get through this is listen to a diversity of folks. You can have people you trust, right? There's a lot of people these days who trust me to think about the crypto stuff. But I also tell them, it's like, you got to do your own research, man. I have my own biases. I'm not always right. So you should just have different opposing viewpoints when you're thinking about the crypto space. All right. Reflexivity is this interesting concept when it comes to different narratives and the fundamentals of something. So I don't know if I can explain it well, but this is an example of a reflexive system, this chart here. Price will influence a narrative, and narrative will influence the fundamental. And those fundamentals, in turn, influence the narrative. And that narrative will, in turn, influence price. That's a little confusing, but let's use some examples. Let's use Bitcoin as an example. When Bitcoin's price is going up, the narrative on Bitcoin changes. People are like, yo, Bitcoin is the future. It is here to stay. That changes the narrative. It's a positive narrative. It's a bullish narrative for Bitcoin. Because of Bitcoin being the way it is as more people accept Bitcoin as a brand and as a coin, the fundamental of Bitcoin actually improves, right? If it becomes more accepted in society, it makes Bitcoin just stronger as something that actually can be legitimate. So that fundamental improves, leads to the narrative of Bitcoin improving. When that narrative of Bitcoin improves, that price goes up, right? People are like, oh shit, Bitcoin is legit. I better get in, I better buy, and more buyers come in. So that's like how this reflexive system works on the positive side. Happens on the flip side as well. And the flip side is sometimes people will call it a death spiral. So let's talk about that again. Let's say Bitcoin price goes down. It was $90,000 today. Tomorrow it drops down to $45,000 for whatever reason. People start building these narratives. People's like, Bitcoin is dead. It's over for Bitcoin. Bitcoin was a scam. Always was a scam. Always will be. When that narrative happens, people question the fundamentals now. It's like, do I even want to hold my Bitcoin? People are right. Maybe this whole crypto thing has been a scam. It actually leads to more sellers. And that's when the fundamentals of Bitcoin go down and becomes more bearish. That in turn continues influencing the narrative. And that kind of bearish sentiment on Bitcoin is like, yeah, 45K, this shit's going to go down to 20K. Because it's just like, it's not even real money anyway. And that in turn influences the price to continue going down. So reflexivity is just this interaction between the narrative and the fundamentals of a project. And you see it a lot more within crypto. I don't know why, but it is just something I've learned. It's like, this is why there's such high highs and such low lows, is that it can be a very extremely positive feedback loop, or it can go into a death spiral. Narrative has now played such a strong role in crypto. And there's still, a big argument to be made that like a lot of crypto ends up being useless because like what kind of function does it do anyway? But, during good times, like, man, if everyone believes in crypto, it's going to be legit. We're at this stage right now in like, what's the date? November 14th, 2024. I think what we're seeing is that that narrative is starting to change again. You know, the last maybe 3-4 years, crypto's kind of been in a bad space in terms of the narrative. It's like crypto's over, you know, the FTX thing, you know, crypto has always been a scam. We're seeing that narrative change, and now we'll probably start seeing the fundamentals change. So where we're at in this cycle, we'll probably see how that influences the price, and we're gonna go up into like this craziness again. Any question there? Reflexivity is like one of the hardest concepts for me to like understand, but once I like dug through it a little bit more, it totally made sense. I think it was invented, at least with a financial lens, was by George Soros when he was doing his kind of breaking the British pound or something in the 1980s. All right. Okay. So this is where I think crypto is very interesting. The next mental model. Crypto increases intra-capital flow. So before we even think about intra-capital flow, I have this chart here, and I want to kind of explain to folks what this chart says. It shows capital or value. You can be seeing it beyond just money, right? Sometimes we think money is the only sort of capital. You look here, financial capital, there's money, savings, debt, income. That's a sort of financial capital. But if you think about it, actually, there's capital in so many other places. Experiential capital, intellectual capital, right? Your knowledge is power. Your education is power. Your know-how is capital. That's value. Cultural capital, right? There are some things that hold high cultural capital compared to other things, right? You know, kids in Brooklyn have higher cultural capital than kind of, you know, finance bros in Midtown, right? Social capital. These days, you know, when they say your network or your net worth is your network, it's your connections, your social network, your family, your friends, the people you know. That is a lot of value. That's a form of capital, social capital. Spiritual capital, living capital, material capital. Material capital can include real estate, physical, all that stuff. So when I think about capital, I think about it beyond just financial, and I think about it all this, right? You can have high living capital, high spiritual capital, all that stuff. And what crypto has done, alongside all these other technologies we've seen through the years, is that capital is now flowing, and it's easier to flow from financial to experiential, from financial to cultural, from cultural to social, from social to material. There's so many different examples of that where people are able to leverage their social capital to turn into financial capital in some sort of way, right? Let's think of some examples. You know, I know he's not a well-liked president, but you know, Donald Trump is a really good example of someone who took his first his social capital, right? He was inherited into the real estate world. Then he built his whole real estate business, and he moved that material capital into, it's not listed on here, but I would say he has strong political capital now, right? People see him as a politician. He was able to go from social capital, material capital, now political capital, and obviously all that helps him bring in his like financial capital in whatever ways. Same way, you know, we can see other folks. We can see artists who are, they have high cultural capital. They're able to turn that into financial capital. And that financial capital allows them to, you know, do something else, increase their living capital. You know, when you make money, obviously your living capital, your health is probably improved in whatever ways. So what crypto has done beyond just what all of our other technologies, I think social media has just like been a really good example of how social capital can be moved into other forms of capital. Crypto will continue increasing that intra-capital flow. Things like intellectual capital, it's probably easier to change into financial, to social, into cultural, et cetera, et cetera. Intra-capital is when things can move from one form of capital to another. And I think about that all the time in terms of what crypto enables. That's this idea, you know, we saw like the run of NFTs the last in 21, 22. It's people making art and trying to sell it. And that was like a form of just cultural or kind of artistic capital and kind of making it easier to become financial capital. All right, next mental model. I think the term cryptocurrency is actually a really bad misnomer. I think crypto is more than just a currency, and is actually, you know, no one really ever uses crypto as a currency to like pay people. Not yet, at least. Stable coins is one thing, but I like to think about the lens of crypto in terms of a few other ones. There's crypto equity, right? That's not a well-known term, but that's what crypto does. It gives you ownership in a specific network. There's crypto governance. Sometimes when you hold some of these tokens, you get voting rights to that network. Crypto gas. A lot of these tokens are used to cover the transaction costs of using that network. The two big examples is Ethereum and Solana. Whenever you make a transaction on the Ethereum network or Solana network, it becomes a transaction cost. NFTs have been an example for access to the network. So, some people came up with ideas like if you have this NFT, you get access to, our kind of private Discord channel, whatever. So when I think about crypto, I hate that term cryptocurrency, and that's probably why you don't see it in my workshop today. Is I think crypto is crypto equity, crypto governance, crypto gas, whatever else. Crypto is it's helping the flow of intra-capital flow, and it's kind of thinking about value and how things change in all these other ways. And this is just like another way how I think about it. Cool. All right, moving on. I see no questions. Again, if there's any questions y'all have, feel free to put in the Zoom chat. I feel like I'm talking to myself. I don't know if this is boring, folks, or not. Mental model. Find ways beyond buying and selling coins. I think when you get involved in crypto in the first place, all you think about is like, oh, let me just buy this coin. Let me sell this coin. That's how I'll make money. Actually, the way I was most successful within crypto was I was building. I was building and learning how I can get involved in building out various projects or various coins in whatever ways. Here are 3 examples. I have DePIN, I have AI agents, AI cults, and I have airdrop farming. These are just 3 of plenty of other examples, but let's go over these specific ones just so folks have a good idea. DePIN. So this is where, this is where I have my back bias. This is where I've been successful, probably most successful in the crypto space is in the DePIN space. DePIN stands for Decentralized Physical Infrastructure Networks. The 3 examples I have here, HNT, which is the Helium network, Honey, which is the Hivemapper network, and FIL, Filecoin. So what DePIN does is that if you can contribute and add value to a network, you get paid in those networks tokens. Let's go to HNT. HNT is it's a Wi-Fi network. When you provide Wi-Fi coverage, you get paid in those tokens. So my nights and weekends, I'm not sitting so much on my computer buying, selling coins. Of course, I'm doing some of that. But my nights and weekends, the last couple of years, has been in the DePIN space and within Helium. I buy these Helium hotspots and I deploy them. I put them at various folks' place, different restaurants, different coffee shops, all throughout to provide Wi-Fi coverage. And I do that because I know there's, you get paid tokens. So I went out, and why I think DePIN is also interesting is like you actually go out in the real world. You're not sitting there at your computer the whole time, and you're building something that my argument is that I think there's actually going to be a real world use case for crypto within this space. So that's what Helium is. It's for Wi-Fi networks. You provide Wi-Fi coverage, you get paid tokens. Honey is the Hivemapper network. Similar. You provide street view photos, you get paid tokens. So they're trying to build pretty much a decentralized Google Street View. I put it in my car. 2 years ago, these days I'm living out in Southern California. I'm in LA. 2 years ago, I drove all throughout SoCal. I drove from Santa Barbara out to San Bernardino, down to Orange County, and like all these small roads left and right because I was trying to get more Honey tokens. I was providing Street View data because I think, my argument is that I think that was a more compelling model than what Google Street View is trying to do. Filecoin is actually the original DePIN project. Some people may even say Bitcoin was, but Filecoin is if you provide file storage space for the internet, if people need file storage space and you provide it, you get paid in the Filecoin tokens. Some people would say Filecoin's the first one. I said some people may even say Bitcoin's the original DePIN, because if folks know how Bitcoin works is if you provide the computer processing power for Bitcoin's network, you get paid in the Bitcoin token. So that model of providing the kind of proof of work that whatever network kind of incentivizes and you get paid in the token, it led to this space of DePIN. DePIN has been around since you know, it's been around, but in terms of the name and the term, I think 2021 was when that term first came out. But that's like that kind of pattern you see. And going back to Phil's question about thinking about meme culture is, you know, Helium became really successful as a project because of like the coin price just being just really lucrative if you were putting up hotspots. It spawned just like different kind of iterations or memes of that similar project. Instead of Wi-Fi coverage, why not we do Street View coverage? Why don't we do, there's like GPS one, there's like air traffic control one, there's a weather station network called WeatherXM. There's a lot of new ones about providing solar energy to the grid. If you provide solar energy, you get paid in the tokens. So it's like these different incentive models that kind of use the real physical infrastructure networks to try to build some kind of cohesive network. So I'm telling folks here, I think a lot of folks who are here also know like the place I've been most involved within crypto is in DePIN space. Let's move on. AI agents, AI cults. This is a new phenomenon that has popped up, I think, in the last month. So the first coin that popped up that became popular is called GOAT. AI agents are, there are now ways that you can use tools like ChatGPT, Claude, Gemini, all these AI tools where you can actually build like your own little kind of robot that just like does its own thing, right? So some guy used, I think, the OpenAI API to create an AI agent that just like became its own little Twitter account. It's called Truth_terminal. And it just like tweets its own things. The guy who built it, he doesn't even control those tweets really. And that kind of AI agents started tweeting and said the best way it could make money is to launch a meme coin. So by tweeting that, someone gave it the address for this coin called GOAT. And then it started just getting behind GOAT and supporting GOAT. And it's like, hey, GOAT is the coin, the meme coin that will make all of us rich. And this AI agent just started like pumping a lot of content, just like, you know, trying to get people to invest in GOAT. I think last week GOAT hit $1 billion market cap. So it was like the first time an AI agent, like a non-human entity, like just pumped some coin, and you know, it's now this crazy phenomenon. We've seen more. Shogoth was another one. Act. And like the hard thing is like there's probably over 200-300, maybe even more of these AI agent coins now. I think if you are interested in like experimenting, playing in that AI space, see how you can learn getting involved in that AI space and like how it kind of intersects with crypto in whatever sort of way. Of course, it's a little harder because it's like you can't just like force your AI agent to like pump a coin. Maybe you can. This is, you know, the AI stuff is a little bit actually out of my alley for me to understand how you can kind of create those parameters. But I think it's a new space, and I know Coinbase on their blockchain base, they launched a whole project called Virtuals, where anyone can launch their own AI agents. And alongside that, I think every AI agent will end up having its own coin or whatever. So it's a brand new space, and it's a way that you can like kind of learn and kind of interact with the crypto space that's beyond buying, selling. The last idea here, airdrop farming. I put 3 projects here: Uni, which is Uniswap, Jupe, which is Jupiter, and Jito Soul. If you were using these products early on, if you were an early user, these products, so Uni and Jupiter are both exchanges. So if you were trading whatever coins using their exchange, because you were an early user, they rewarded you with their tokens later on. Jito Soul, if you were someone who converted their soul into this other coin called Jito Soul, being an early staker to Jito's network, they gave you coins. So that is the term in crypto world is it's called an airdrop. It's really just trying to incentivize people become users or early users in some sort of way. And some of these became pretty lucrative. I think if you had staked 1 Jito Soul, you know, you could have, a year ago, you could have bought 1 soul for like $20. If you had staked it within the Jito network, your airdrop at one point was worth over $100,000. So just being an early user and experimenting and playing around with all these tools, sometimes these projects, the way they incentivize you is the earlier you are, obviously like the higher chance you get of potentially being rewarded, and rewarding in terms of airdrops Airdrops in a way became its own little meme that, you know, everyone was just like playing with all these different tools with that hope. It's like, okay, maybe I'll get an airdrop from the project one day. So yeah, I think about this mental model a lot. It's like, yes, buying and selling coins is one way to get involved in crypto, but there are so many other ways. And I think these are three pretty good examples of it. 21, 22, if you were launching and building your own NFT projects, you know, creating art, whether, you know, it's generative art or whatever else and turning into NFT, you probably could have been pretty successful in the crypto space too. See what time is it? 3:16. Okay, so we got about 45 more minutes. 6:16 Eastern time. Okay, crypto is usually business model innovation. So when I think about this, I read somewhere about the two types of innovation. There's technology innovation and there's business model innovation. Crypto, I would say, usually leans towards the right side, business model innovation. What are the differences? I got this chart here from ChatGPT actually. So technology and innovation usually is like a huge technological shift. I would say like AI is a good example of technological innovation. Electric vehicles, even like our phones, smartphones, that's a technological innovation, right? That's technology that evolved into some sort of way that has led to innovation. Crypto, you don't see it so much where it's technology innovation. It's actually more business model innovation, changing the way value is created, delivered, or monetized, changing how revenue streams or making things operationally more efficient, changing how business models look. Um, when I think about crypto, I think that the things that are more interesting end up being like some of the business model innovation that comes from a lot of the crypto projects. So this is just, you know, one of those mental models I think about. It's not always 100% correct, but, you know, again, it's a general idea. See a thumbs up from Sarah. Cool. All right. The next mental model, skeuomorphism. Has anyone heard of this term? Feel free to say yes in the chat. Yes, yes. Cool. So some of y'all know what skeuomorphism is. Um, Skeuomorphism is when when we're building new products, new projects, new ideas that kind of represent something of the older world, right? Something that people previously know. So here are some examples. You know, calculators were the first digital calculators. They try to make it look as much as like as a real life calculator as possible. And you see the evolution. It's just like it's gotten more and more to be it's like its own kind of digitally unique experience. Email, same thing, right? It was trying to be a representation of like mail from the mailman, that icon of just mail in the mailbox, right? It's obviously not what happens in the digital world, but having that pattern was very helpful for people to like understand what email was. This example of iBooks, right? There's obviously no point to have some sort of visual bookshelf at all. In the world of iBooks or ebooks, is you can have like a bajillion books and you don't need no bookshelf to store it, right? So this visual representation of this bookshelf is very skeuomorphic. It was a way for people to have an understanding of like, hey, you know, these books sit on your bookshelf. These icons, all of them, very similar, right? The camera one, the Instagram one, the Safari icon. It all represented something of our past, cameras or a compass in this case, and has now evolved into something else. Another way I look at it is as we move down the curve of like these newer ideas, crypto being one of those newer spaces, you see a lot of skeuomorphic ideas come out at first, right? People's like, oh, let's do Uber, but for crypto. Let's do Airbnb for crypto. Let's do email, but for crypto, right? Those ideas, like, it helps because people can kind of recognize those patterns and kind of get it. But if you want to be truly like innovative, be on the lookout for things that are non-skeuomorphic. Something that is like just so beyond what we've seen in the past. Going back to like what the idea of like the business model innovation, I think a lot of new crypto things, sometimes it's really hard for people to get and it gets complex in ways because there's really no kind of pattern of the past really. So non-skeuomorphism is what I tend to try to look out for when I'm looking at things in the crypto world. All right, let's go next. Okay. This mental model, playing the meta game. This is again, if you're like a short-term trader, this is you have to master and understand what the meta game even is. So we've been using the term memes to kind of talk about different patterns of whatever, society, coins, all that stuff. Um, the term these days that people are calling it is metas. There's different metas within the crypto world. You have heard of some of these. DeFi became a meta, right? Decentralized finance products. Airdrop farming became a meta. New L1s. L1s stands for layer ones. That became a meta. It's like, oh, whoever's building the newest L1, that's going to be the best investment. Meme coins became a meta. SEC coins. Last week, we saw a bunch of what people were calling SEC coins just have huge returns because of this new administration that got voted in. It's going to be more pro crypto. There were a lot of coins that SEC had announced they were investigating because of the new administration. Those SEC coins ended up pumping because people were like, those coins will be no longer under investigation. AI infrastructure is a meta. Financial nihilism is a meta. These are like all different kind of narratives or patterns in some sort of way. And when you understand that crypto, as these different projects pop up, they all end up being all these different metas. I have DePIN, AI agents, NFTs, all of that. These are all different metas, dog coins. As you get better at understanding all the things within the crypto world and all the different metas that come out, you have to get good at understanding how you play the meta game. Identifying the different metas as a starting point. But people who end up having like the best returns, if you're a short-term trader, is you want to know the meta before the rest of the world comes in, right? Get in there before the room fills up, right? If you're in there early, the coins are going to pump much higher and quicker, more rewarding. So it becomes like a race in a way. Again, this is usually for short-term trading. So if you're thinking about like trying to be, a short-term trader and trying to get in, you have to understand crypto culture and the crypto space and understand all these different new metas that come out. Like I said, the AI agent thing that has come out in this last month. New York Times put out something this morning about AI memes, and it pumped the coin like 10x this morning. So, understanding how things spread across knowledge-wise across society, the earlier you are to these meta, I think the higher chance of being kind of financially rewarded you'll get. So unfortunately, I hate to say it means like you gotta be early to the game for the most part. If you're early to the game, you're gonna make these kind of huge returns. Playing the meta game. So meme coins have been very polarizing within crypto, just the crypto industry, because for the most part, meme coins end up being kind of like useless, right? They're just jokes. People are like, are you serious? This dog coin? What's the point of this dog coin? Firstly, what's the point of crypto, right? But it's like, why would anyone buy this dog coin? But like, let me pull it up. Dogecoin, if you have seen where the price is like today, I see it as 36 cents right now. I think like a week ago, it was like 7 cents, right? Meme coins have now, it's been one of the hottest metas for this last maybe year or two as a potential meta that just like will continually take off for whatever reason. I don't know if folks know this mid-curve meme, right? There's the guy on the left, I like memes. There's the Jedi Knight on the right. We all like memes. And then there's people in the middle. Like meme coins are bad for the crypto industry. The crypto industry is always split in like these two spaces. Whereas like people who are like, oh, crypto has all these real amazing world use cases, and meme coins are so dumb and such a joke, and there's no value in it. But then, that's mid-curving it. You're left and the right. You're going to be buying those meme coins, and you're going to be financially rewarded. So I always thought this image was really interesting. Me personally, I was very into like, oh, I think crypto has a lot of cool, innovative use cases. But then it was 2020, 2021. I saw some of my friends who were buying Dogecoin. I was like, damn, you guys were making amazing returns. And I sat out because I was mid-curving it. I said, meme coins are so bad for the crypto industry. They're so dumb that I had changed my thesis. I was much more open to meme coins in this past year or so. I was like, I'm going to just buy all these dog coins. I'm going to just buy a bunch of these meme coins because, it's if people are getting these returns, if I'm here trying to make some returns, I might as well try to allocate some to meme coins. I don't want to sit out on it. And I think I was fortunate that I was able to be ahead of the kind of the meta in that case. But I still think we're not there. And I think this conversation will continue pervading in your friend groups, in society, because meme coins are being a huge part of like just the crypto space. And a lot of people are like, this just makes the crypto space look terrible, right? Just like these meme coins that have no function, no value, or whatever. And then there's other people who just embrace it. It's like, yo, meme coins are just, it's part of, like I say, internet culture, right? Whoever thought Instagram would be a place where, you know, you used to share these beautiful pictures, become a place where you're just sharing memes. And I think it's just like something to embrace and kind of think about. Going back to memes, I now see the idea of meme coins were like these coins that became their own memes, like Dogecoin. But the example I had brought up earlier, the peanut, the squirrel one, we're now also seeing memes that get turned into coins. So I think we're going to see a world where it's like all memes end up having some sort of coin and it becomes the financialization of memes. Whether people are like it or not, it's going to happen. And I think it's, you know, if you are good at meme hunting, if you're good at going on Instagram and digging and finding the best memes that end up becoming the viral memes, I think you can really translate that skill set over into the meme coin world. Put in 10, 20, 15 bucks, you know, and it's like it doesn't have to be that much money. The returns can be pretty tremendous within it. Thing. What is the best source to check out the different coins and crypto values, such as the Bitcoin platform? Jada, I'll show that in a bit. Thanks for asking that question. Hold on to it for now. Okay. Oh, okay. So tokenomics. Has anyone heard of the term tokenomics? Put in the Zoom chat if you have, or even put in no if you haven't. Jada says no. No. Leigh says yes. No. But tokenomics is another way to kind of say just token design or how a specific project organizes like the parameters of the tokens. Let's see. There are a few different aspects of tokenomics you should pay attention to. I'll list it here and we'll dig into like a website where you can like look some of this stuff up. FDV, I think, is probably the most important thing that people should be looking at instead of token price. People are always looking at the token price. You'll hear like, oh, Bitcoin's at $93,000, or you'll see like Dogecoin's so cheap, it's 37 cents or whatever. You should look at the fully diluted valuation. Fully diluted valuation is actually the token price multiplied by the number of tokens that are available or that will be available. And that gives you an idea of the market cap or market capitalization. In crypto world, sometimes you have this FDV, which is the fully diluted valuation, or also known as fully diluted market cap, or the listed market cap. And there's something called an emissions rate. Some projects, they kind of give out a certain number of coins at some specific rate. So that's called the emissions rate. So let me see if I have the screen on here. Okay, right here. So this is coinmarketcap.com. You can organize it based off of token price. You can organize it. You can get circulating supply. So circulating supply is how many is out there in the market right now. Let's look at this example of Bitcoin. It says 19,782,000 Bitcoin are out right now. Let's go all the way over to the right. Total supply. That's total supply that's out. I'm gonna actually pull up the browser so we can go on this a little more. Let me close this. Stop share. Let me share my browser for y'all real quick. Okay, so coinmarketcap.com. I like looking at this site because you kind of get a good breakdown of all these different tokens, right? So you get price, circulating supply, fully diluted market cap, total supply. I'm going to customize mine. I'm going to put something called max supply. Add max supply here. And let's move it over for you to see. So max supply, let's just put it next here. Max supply, some projects They announced already, it's like there's going to be only this many tokens ever within this network, right? Bitcoin's the most famous one. If you look at the white paper for the original kind of Bitcoin's original white paper that came out in 2009, the hard-coded law of it was that there will only be 21 million Bitcoin. That means there will never be more than 21 million Bitcoin in existence. This is also why like Bitcoin is always also known as like that inflation hedge, and that was always a narrative. So far, 19,782,000 Bitcoin is out in existence. That's 94% of the network is already out in the market. And as the Bitcoin miners do the processing power, Bitcoin is emitted to the ones who like, solve that math equation or whatever. And it's going to take, I think, like another 100 years for all 21 million Bitcoin to be emitted out to be tradable on the market. Circulating supply times price equals the market cap. But price times the max supply equals the fully diluted market cap. So when I think about the valuation of some tokens or some projects or whatever, I think it's much more important to think about the fully diluted market cap, or sometimes, FDV, compared to just the price. Because the price, some of these projects have different numbers. Like XRP here, you see it has like 100 billion tokens that will be in existence. There's only 56% of it out there in the market right now. Cardano, 45 billion. Some of these are listed already, right? Some other projects, depending on how some of those projects go, they don't have a cap. Ethereum actually doesn't have a cap. Solana doesn't have a cap. It can continue inflating forever, but there's all these different rules and going through governance and all that stuff that sometimes people say there will eventually be a cap placed on it. So Jada, going back to your question of, what's the best source to check out different coins, values, all that stuff? I like CoinMarketCap. You can break it down. You can create your own watch list. Some of the kind of metas I was talking about, there's like meme, Solana ecosystem, AI, gaming, RWA, DePIN, AI memes. They kind of like categorize some of those for you, right? Here's GOAT. GOAT's like the top kind of AI meme here. I personally am deep within like the Solana ecosystem for all these different projects. You can look at like all the coins within the Solana network. AI is a little bit different than AI memes. There were a lot of different like projects that were like about AI and AI infrastructure. So, that's how you categorize it. So CoinMarketCap is where I go. Let's go back to the PowerPoints. Any questions so far? Feel free to ask. Go full screen. Sorry, I need some water real quick. All right. Next mental model. Know the lingo. There's so much lingo that happens within like crypto world. It just becomes its own culture. And like all the time, I have to just Google like, what the hell does this even mean? Tokenomics is one of those, right? What are like the token economics of the project? HODL is another big one. HODL was like someone on Reddit typed in HODL. I think they were trying to say hold, and then it became its own thing. People say it stands for hold on for dear life because of the volatility and ups and downs of crypto. Getting rugged means like you're buying some projects or some coin and it ends up being a scam, and like the developer just sold all his tokens, so it plunges to zero immediately. That's when you're getting rugged. FUD is fear, uncertainty, disappointment. FUD is a term that actually has been, I think, more pervasive within even just like traditional finance industry terms, but it now, you hear a lot in crypto world. Let me see. Phil has a question. Does it affect the value trend once the maximum number of coins is mined, or is it hard to tell that it will affect the value really? So there's this whole thing, Phil, that a lot of projects, they may have a really large max supply. Let's say they have like 1 million coin max supply, but they put out in the market at first just 1,000 coins, right? When there's just 1,000 coins, that's like, I don't know, I think that's 1%, maybe less of 1 million of the coins on the market, right? So the inflation is like, as more coins enter the market, it's going to potentially lead to the value maybe going down. And this is why fully diluted valuation is important to think about, because when there's only 1,000 coins on the market of this max supply million coins, it's going to be easier for people to buy up and hold, and that makes that coin price significantly high. But once it gets emitted out and more coins enter the market, it could lead to that coin price going down significantly. So that's why thinking about the FDV, or the max supply and the fully diluted market cap, is important, because some of these projects, they make it look like the coin price is really high because they only have 1,000 coins on the market, but they, maybe the developers or the founders are holding on to like 900,000 other coins of that project, so that when they can sell to the market, they're hoping that high price stays that high so they can sell. But like, as more coins enter that market, the price probably goes down over time. Cool. Glad that made sense. I know it's a little complicated, but like that was the easiest way I was able to explain it. Going back to the lingo, some other terms. Maxis. Maxis is like a really big thing within crypto. Maxis stands for maximalism. So there's like all these different kind of cults or tribes within crypto now, because everyone has their own kind of bags or investments, right? Bitcoin maxis are people who think Bitcoin is the only coin that matters and the only coin that should exist. Maxis are usually people who like just believe in that one coin and that one coin only. So there's a big world of Bitcoin maxis. There's a big world of like Ethereum maxis. And then all the other ones, there's like Solana maxis, everything else. Some people would even call me a DePIN maxi, right? It's like, I just think for me, it's like, there are times where it's like, I think DePIN is the only crypto thing that matters. Everything else is just useless junk. When you come across a maxi, know that they're extremely biased for obviously whatever coin or projects that they're backing. DYOR, do your own research. KOLs stands for key opinion leaders. So this is just like another term for influencer, I think. I don't know why it had to just come up with this term, but here we are. Alpha. When you have alpha, means you have like valuable knowledge on some sort of project, and you can provide some sort of value in some sort of way. So sometimes when people are like hunting for the next thing to buy, they'll be like, I'm looking for alpha. Where's some alpha, et cetera, et cetera. Or like, can you provide alpha? So alpha has always been a term, I think, in the finance world as well. It's like, do you have good value that you can provide on, whatever specific investment? L1s versus L2s. So L1s is like layer ones of these platforms. Some of these coins end up becoming platforms. Bitcoin is an L1, Ethereum is an L1, and Solana is an L1. But then these meme coins that launch on top of Ethereum or Solana, they're not L2s, but they're coins that sit on top of those platforms. Ethereum, for whatever it is, L1, the Ethereum L1 was just not scalable and not fast enough. So they built this whole world of L2s, and it just like made things even more confusing, in my opinion. But there's all these different L2s, so these other blockchains that sit on top of the Ethereum blockchain. So that's what L1s and L2 stands for. Restaking is when you stake your coins. That's an advanced concept that I actually can't explain well because I don't really know it well. So let's just skip it for now. Liquidity pools. So when you're creating these exchanges, to create liquidity for it to be able to be traded, there's these liquidity pools. If you provide liquidity to those pools, sometimes you can incentivize. You get paid a fee for every transaction that trade that happens within those kind of exchanges. So that's just liquidity pools. Again, these are just some terms. Like I said, I know a good amount of them, but sometimes, like I said, like restaking, it's like hard for me to even explain or really understand the concept. But the more you like learn the vocabulary, the lingo, I think it's easier to navigate crypto. Oh man, it's 3:40 already. Okay. We got a few more. Tax strategy is important to think about. Crypto accounting software is going to be necessary if you end up having multiple wallets. For whatever reason, crypto is actually like, for me, I end up having all these different wallets in all these different places. The only way you can keep track of, if you bought Bitcoin in one place and then you had transferred to another wallet, it's like impossible to do without crypto accounting software. The one I use is called CoinTracker. You can like Google different tools, but these softwares are necessary for you to link all your wallets together. It makes it so much easier. So I think thinking about tax strategy is definitely, helpful to think through what your kind of investing or trading strategy is. You should think through long-term versus short-term capital gains. This will help you decide, do you want to be a long-term trader or a long-term investor or a short-term trader? Just like selling and trading stock, usually the capital gains for long-term investments is smaller in terms of tax versus a short-term capital gain. Same thing with crypto. So keep that in mind. It also like forces you to think, what sort of investments are you going to do? Because you may not invest in like a meme coin that like will make, a quick 10x in a week, but go down to 0 2 months later if you're thinking about it in terms of the taxes and stuff you want to report and all that stuff. All these ideas like staking can get annoying tax-wise. There was, I was probably my most degenerate in terms of the crypto world in like 2020, 2021. And I did all these things. I was experimenting with all these things. But then looking back, I was like, some of this crypto accounting software is not even like up to par yet to like deal with these features. So it got really annoying to figure out how to do it tax-wise. So keep that in mind. So like when you go through on some of this crypto stuff, yes, you can like play with like stuff for like $4 or $5 or whatever and not have to deal with like crazy tax stuff. But if you're trying to make it into like a bigger space, you should be thinking about your tax strategy at all times. All right. Next mental model. Being organized is super powerful. I have so many friends who I've sent whatever coins to. If I put a hotspot at their place and they got tokens, I tell them to download and set up these wallets, but then they lose their seed phrase or their password. And then they lose all those tokens. So make sure you're really organized. So the first one I put here, secure all your seed phrases to your wallets. Ideally, not digitally, because what a seed phrase is within crypto world, for whatever reasons, these wallets, they give you these 12 words that end up becoming like the password to access your wallet. If you keep it digitally, anyone who is able to hack into your whatever or phish you and get that information has access to your wallet. So as you like develop and build out a system of getting all these different wallets for these different ecosystems or whatever, the more organized you are, the more likely you'll be able to like make sure you don't lose your coins. I think that's what I said here. People lose wallet access all the time from being unorganized. This last one, new ideas, that was a previous point. I don't know why it's there. Sorry. Cool. Back to being organized. Another thing is like keeping it simple. I like to think about this. This is not Pokemon. You don't have to catch them all, right? There are so many new projects, so many new coins, so many new metas, so many new ideas to be involved in. You don't have to catch them all. You can spend time on just like a few things that you think is like, that's going to be the important thing for me to learn and develop in. Focus on those. Keep it simple. The simpler you keep, obviously it's like the easier for you to keep track of all your coins, and the easier it is like come tax time to like figure out all that stuff too. And also it just like helps you build an advantage and like kind of stand out. Crypto has now matured into like this space that touches so many different industries. There's like the gaming industry, which I barely know really about. There's like the NFT and art world, which like I know I work in the art space in my day job, but like I actually don't really know NFT stuff that well. There's like the DePIN physical infrastructure stuff that like I focus and spend most of my time on. The meme coins, DeFi. DeFi is like this huge thing about like the financial industry being on the blockchain, all that stuff. You don't have to be involved in all of it, right? So keep that in mind. It's like find a few things that you think make sense or like you think will be the important one in the long term. Just focus on those, right? Obviously, the more time you can kind of commit to like navigating the crypto world, obviously the more you can learn. But sometimes when you try to ingest all of it, it gets really overwhelming and really hard and complex. Find those one or two things that really get you interested and keep you going. And going back to the risk management is like the key is that you can stay in the game as long as possible. Don't lose all your money, and you'll continue just being invested. So my learning tool stack. I guess I'm done with all the mental models. So this is just a few resources that I use that I learned from. Crypto Twitter. I always put crypto Twitter because it's just Twitter, right? Or now X.com or whatever. But I keep my account like just specifically focused on the crypto world. And crypto, usually that's where they kind of convene is on Twitter still. So if you want to like dig and learn about crypto in whatever ways, Twitter is still probably the best space. There are some other spaces, Discord, there's this new social network called Farcaster, but I spend most of my time in crypto Twitter if I want to learn about crypto. Podcasts. I have a huge podcast diet. I have a podcast playlist I'm happy to share with folks. It's like 180 hours of podcast now. But these are three of the big ones I've been listening to as of late. Blockworks is like just its own crypto media brand. Good Game is like these two guys who run this incubator who are just good intel about crypto. And then Unchained by this woman, Laura Shin. She's been covering the crypto space for like 8, 9 years. Those are three of my favorite podcasts. Coin Market Cap, we just went over. Trading View. Trading View is where I put my watch list. Because I do short-term trades and I like have studied charts through the past, I use Trading View to kind of look at charts. I have a bunch of newsletters, but the three that I would recommend the most: CoinDesk, just for like overall crypto market news. Simple newsletter. It's a daily thing. Milk Road is for beginners. It has like a layperson explanation to things, and it keeps pretty up to date in terms of like all new developments going within crypto. So Google Milk Road newsletter. Rect Capital for chart analysis. So that's like for more short-term traders. I like that one. Those are like the three newsletters I think I read the most. I subscribe to a bunch, but if you subscribe to those three, you'll learn a lot about crypto just from that. Discord is where all these projects end up like being most active. I personally hate Discord. I think it's just like so hard to navigate. So sometimes I'll go there. And I know you can get a lot of good alpha or good like intel about things within Discord. I need to like try to stay committed to it more, but I don't. All this listed here is definitely where I get most of my like crypto knowledge. And then just like experimenting, playing around. And also I have like various just like friend group chats, people who are like in the crypto space for one way or another that I chat with regularly on iMessage, on Telegram, on WhatsApp, whatever. My trading tool stack. So this is what I pretty much use these days to navigate crypto. Phantom Wallet, Bird Eye, Jupiter. Beam is this thing that you can send USDC and it goes straight to your bank. Like literally, I can send USDC to it. I get it money in my bank like within 5 minutes. It's kind of crazy how fast it is now. Gemini is an exchange that sometimes I'll use for trading things. Pump.fun, I like to experiment with, just like learning about this like meme coin world because it's like insanity. I'm not that active, but you know, I'm always experimenting, trying out all these new things. Rainbow Wallet, if I have to interact with the Ethereum ecosystem, I use Phantom because these days I'm mainly just within the Solana ecosystem. And then I mentioned it earlier, Coin Tracker for taxes. Any questions so far about Learning Stack or even Use Stack? Let's see here. What platform to actually buy crypto would you recommend? I guess it depends what sort of coins you want to buy, right? Yeah, I think Coinbase is always the good, they call it on ramp, right? It's easy. You sign up, you can buy coins there, then you can move it to like this decentralized world. There is this new app that I think is going to get pretty popular. It's called Moonshot. Moonshot, you can buy coins directly with Apple Pay. It's like a little insane to me how easy it is to just buy coins now. And Moonshot is specifically for like the meme coin space. If you guys want to play around with it, download the app and you'll see it's like, man, you can just like buy 20 bucks of this coin like that with Apple Pay. So I think there's like a lot more tools these days that make it easier to buy crypto. I would say in terms of buying crypto to get started though, funny enough, I actually have not put in regular money into my crypto accounts in like 8, 9 years. I've built up a lot of my crypto stuff just like within the crypto ecosystem. So I don't know what's good for on-ramping, Phil. I would say Coinbase is still probably the best starting points. And then from there, you can move it to other wallets, decentralized wallets. Let's see here. Let's go. What else do I have? Oh, another shiny new toy syndrome. Tendency for new coins to have bigger returns, but riskier. So it's like you don't need to always be chasing a new coin. You know, it's like there's always this thing where like the newer the coin, the likelier it's going to be a high return. Another one. Oh, resulting. So this is, I think, the last mental model, and then I'll go over like a little demo of just like my trading stack. But resulting is actually, I think, a really important concept. Bad decisions can end up with good outcomes, just like good decisions can end up with bad outcomes. You should not judge the quality of your decision based on the outcome, right? Sometimes you made the best decision possible, but it ends up being just a bad outcome because of, whatever, just bad luck, right? You shouldn't judge that decision being a bad thing just because you had a bad outcome. Same thing happens with the bad decisions that come up with good outcomes. Sometimes good things happen because you are in good luck in some sort of way. You should not say that decision you made was actually good. So I think about resulting a lot within the crypto space and within, finance and investing and all that stuff. Cool. Any other questions? I think that's the end of my PowerPoints. Yes. We got 8 more minutes. I'm gonna do a little screen share to kind of show y'all how I buy coins. So let me share my screen again. All right. So what do we have here? We have Coin Market Cap. We have Jupiter. Jupiter is where I usually exchange these days. As you see up here, all my extensions, I have the only one is like not crypto related is like Evernote or 1Password. Everything else, these are all different crypto wallets because I just like experiment and just play around with different ecosystems. But the one that I would recommend for folks, if they want to just like play within at least Solana world, is Phantom. Let me put in my password. So I created a wallet just for today. I put one SOL in, which is like $200. One SOL. When you go to a site like Jupiter, let me just open up. So it's like jupe.ag. It's the browser. A lot of these exchanges, they work. Solana, I think, has been really great to be mobile forward too. So a lot of these work on your phone as well. You go here, you do connect wallet, connect to your Phantom wallet. You'll see this thing pop up, connect. So now my wallet is connected, and you see that I have my one SOL here. Let's say I want to buy, let's here's that coin Peanut I had brought up, right? So Peanut, if I want to buy some Peanut, let's say I want to buy 0.1 SOL of it. That's all I put in here. Swap, confirm, and that's easy peasy. Now Peanut should show up in my wallet. Let's see. So I have Solana, and you see I have 11 Peanut. That's $20 worth. So that's Jupiter. Really great exchange, super simple exchange to use within the Solana network. Sometimes if I want to like play around in meme coin land, I use this other one called Bird Eye. So let's just use the first version of Bird Eye. It's the same thing. You log in, you can connect with my Phantom wallet. Yes. Well, I don't know why it's not letting me connect. Let me just see again. Disconnect. Let's reconnect. It's dumb. I don't know why they won't let me connect right now. Maybe I can't show you all this. Let's try V2. Let's see if this works. I guess they're going to force me to sign up is the issue. It's not how it used to be, though. All right, let's skip Bird Eye for now. I use Bird Eye mainly on my phone, so I barely use it on the browser. So I haven't run into this issue before. But so that's Jupiter. Coin Market. What else? I think that's it. Sometimes if you want, you can swap directly within the Phantom extension too. So like here, Solana, if you want to swap Solana, let's say I want to swap some to USDC, let's say another 0.1, you can go here, review order, swap. I don't like trading on the Phantom wallet because they take a 0.85% fee. So that, ends up adding up over time. That's like a 8-cent fee for a $20 trade. But that's another example. Sorry. These days, I am trading primarily on my phone. And these are kind of the main things I use. A little bummed out that I couldn't show you Bird Eye, but that's fine. Jupiter is probably good enough. Cool. Wow, we're just at 2 hours. Any questions? Happy to answer. When you exchange any coin back to USD, is a transaction pretty much immediate? Where does that happen? Also via Coinbase, for example. So when you're using a centralized exchange like Coinbase, it's very easy that you can sell those coins back into USD and then you can deposit that directly into your bank. Let me go back to my browser. When I am on one of these wallets, like this Phantom wallet, it's actually like a decentralized wallet. So it's not connected to any account. So if I wanted to move this USDC to my bank account, I would go here. I would click send. Send. I think I don't know if I have my Beam account set up in here. It might not be set up in here. I don't see it. But I have a specific address and I use this other thing called Beam and it sends directly into my bank account. So if you're using Coinbase, Phil, it's pretty easy to go back to USDC for sure. Chris asks, are there any Twitter accounts you recommend following? Yes, a lot. I think maybe I'll have to send a follow-up. In terms of like the best meme coin chiller, there's this guy named Ansem. Look up Ansem. I forget his Twitter username. Let's see if we can find it. He has been like the lead KOL for this run. And let's see, Ansem. So this is Ansem, Black Noise 06. I think he's always been helpful. Sarah Rupp, yeah. Crypto market open 24 hours a day. Somewhere's not. It's true. That's why it's a little crazy. Who else? There's a bunch of people that I do follow. My favorite venture capital firm is Multicoin Capital. So the guy who runs it is this guy Kyle Samani. I like to follow him. If you go onto my Twitter, you can probably see all the people I follow. Maybe that's easier. I just like end up following a bunch of people just to like, learn. Most of the people that I follow these days are probably crypto people. I would start out with Ansem, Kyle Samani, go through, build your own kind of list of people that you like their kind of stuff from. Laura Shin's always good. I really like Laura Shin. She's the host of the Unchained podcast. I think those three is like a good starting point. Will the PowerPoint be shared? I think we'll email it out to folks. Cool. Otherwise, thanks y'all for joining. Thanks for sticking around for the whole time. I think that was a pretty dense 2 hours. Happy to stick around if folks have any more questions. Hopefully this gets you started on your crypto journey. I think there's always a lot to explore and learn. Thank you all. Thanks for joining. Follow up with PowerPoint. We'll try to get you the PowerPoint and all that stuff. Thanks, Chris. And yeah, hit me up on Twitter. My name is just Fee Unit. Instagram, just Fee Unit. Always happy to chat and help guide folks through the crypto world. That's all on my side. Folks want to ask anything else, feel free to stick around. Otherwise, I'll probably log off soon.
Thank you. Bye-bye.
Thanks. All right, Polly.
Thank you so much. I'm so sorry about earlier.
All good.
My yeah, my audio was like not working, but thank you. Your workshop was incredible. Oh wait, let me hold on. Let me turn the recording off. Actually, 1 second.